NQ market recap for Thursday, the 5th of December, and Friday, the 6th of December 2025. So, for Thursday's price action, there wasn't really much, right? Because Wednesday had the manipulation, and today we expected the star distribution. However, Wednesday didn't even go down to actually manipulate, so we kind of had a delayed manipulation down on Thursday's price action. So once the market is open, and let me show it in the regular trading hours right here. Market opens at 9:30, already seeking sell side liquidity. It basically finished the whole moves in less than 10 minutes because of Wednesday's price action. And for Wednesday, I can almost certainly say it just went to OTE rather than actually seeking liquidity in itself. Because yes, all of this is sell side liquidity, however, it can't go all the way to the lows of yesterday. So let's just show discount. Let's just check OTE because just as an educated guess, this is where I think prices went to on look at that. I'm not even joking. I didn't even check because I didn't trade Thursday. But look at that. OTE to the tick at 223. So you can't say that's random. And because that's like the max price could really go to before reversing, because again the objective is still higher. We're looking at 25,833.75, or 25,830.75, and price can't go all the way to the relative equal lows. However, it's gonna go all the way down to OTE to push price again up higher. And for Friday, which means it's bullish price action, which is I'm gonna explain next. So basically that's why I didn't really want to trade Thursday. I wasn't even looking, but I just knew there was be no point if you didn't catch anything fast. And honestly, I'll say the setup here would probably be the first presented fair value gap without even looking at the price action. So let's look. 931 there. See, you just take the first presented fair value gap that you get into the direction of shorts. Look, 931 fair value gap right here. Boom, you take it. Risk is basically done in 1 minute. You can go break even in less than a minute, and that's only the trade. And in 2 minutes the trade is done. The rest of the day is just going to be consolidation, manipulation, just basically chopping all the way back down to OTE. Alright, regardless, allow Thursday's price action. Thursday was just a filler day realistically for Friday, which will complete the market maker buy model for the week, right? The market maker buy model that I mentioned on the 4-hour chart, which I'll show right here again. It's right there. So as you can see right here, we have our original, if I can zoom in, our original consolidation, then first stage, second stage, reaccumulation. Then we go down all the way to the lows, which is a daily wick right here on the top of it. And then after that, we have our market, our smart money reversal, the low risk buy, the first stage, and the second stage right here to complete this mini market maker buy model in this whole weekly market maker buy model, right? So the clear target for the daily is this 1 minute, not 1 minute, this market maker buy model for the 4-hour, right? So let's explain the trade for Friday's price action. Okay, regular trading hours at 9:30. The second that we open, regular trading hours at 9:30. The second that we open, price action. Right, I'm looking at least if we're gonna make a market maker sell model or buy model to get into the liquidity. So in this day is regardless at the market open, you can either buy or sell, right? And essentially the only thing I'm looking for here is what liquidity is left and what liquidity can we go to, right? In terms of long or high time frame liquidity, which always wins, it's that high, right? And on top of that, as you can see, if I just bring this regulate back to electronic, we have 1, 2, 3, 4 stacked buy side liquidities that the second that 9:30 opened, I've just disappeared. So now that we know London liquidity has been taken, Asia liquidity has been taken, initial liquidity has been taken, and launch liquidity has been taken in terms of buy side right there. Let me just delete this. Now, as you can see, what's left? We have sell side that was initially created at 8:50. We have PM sell side, and that's about it. So we have two sell side at that current moment in time. And wait, what's this red line? And this buy side has been taken. So we've taken so far 4 buy sides at 9:30 initially. 9:30 to 9:31, 4 buy sides have been taken. And then there's just one main objective left, which we take even higher at 10:06. So let's explain the trade. So at this current time, when this is 9:40, which is I'm guessing the earliest that I trade, unless it's something like last day, right, Thursday, where we know at 9:30 we're going to use that volatility to dump the price action. Here at 9:40, once we create the first presented gap, which is here at this 9:31, let me just mark it down here. So we could use that to go to discount, fill the opening range gap, take some sell side, go lower, and then go higher, right? Which means we would be making a market maker buy model, because then we'll have an original consolidation, then we'll have our stages going down to liquidity, then reverse, and then end up the day going higher and closing at our high time frame objective. But as you can see, once we go down, we do not reach the 0.75, which is the upper quadrant of the opening range gap. We actually go higher, right? Which leads to me thinking again, okay, if we can get above the first presented fair value gap again, right? Because we go over it here and then we actually used it, but we kind of failed. If we go above it again, that means price is really, really bullish, because we can't even get to the 0.75 or even the midpoint at 10 a.m. for the opening range gap, which happens 70% of the time. So if we can't do that, the probabilities is stacking up, and the way that price action is moving, that we're gonna go to the high time frame objective first, making a market maker sell model. Okay, so me identifying that, I didn't have time to wait. Normally I'm always going to be selling the market in a market maker sell model, but because I identified it way earlier, I said I'm gonna have to buy it because it's just the easier target, it's gonna be faster, and I'm not gonna have to wait. So once we get above the first presented fair value gap, we make this order block, and I just stare at it and see what we do at the opening price. We go open, we go to the opening price, nice, then we come down here to this volume imbalance and go higher and then close again, and then now we have closed above the first presented fair value gap, right? To me, we're still inside this gap, so I still want to see what is it doing. So once we go above here, and I'm like, all right, cool, and we close like this, I'm like, all right, that's 100% going up, and I'm trying to catch the opening price of this order block, right here, and I don't get it. This is the change in state delivery that I'm trying to catch. Once price goes and displaces again and offers this fair value gap, I know when price does that, it normally closes this whole gap. Normally by a wick or bodies, it doesn't matter, but it goes and closes the whole gap, and it can wick into this. So I put my limit order right here, bought the market right here. It went up, then used, came down, and then offers that initial order block limit that I had opening price, and then goes higher. I got stopped out here because the only when price goes here, it should not come down, but the only reason it went down because it's news. Then once I seen that it's just a stop out, I entered again, and that is I held longer because I kind of got in a bit higher than I wanted to, and I was kind of pushing over the target. But the second that I seen the market close like this, I market closed. So that is let's just calculate it real quick if I can remember. That is around 60 handles, and I think I did it on the combine of 15 continents. So I'm pretty sure it should be around $2,500 or something like that of a trade. So that was not too bad, but if I had time, and I would have waited to the 1050 macro, because if we're going to go up to go down as a market maker sell model, the 1050 macro, 1050 to 1110, is going to drop price. And as you can see right here, at 1049 is the high, which goes to the order block. Normally I'm looking at a fair value gap here, but you probably could look into the 2-minute or just looking at the wicks or 30-second. It goes back and offers that same thing and offers it with the order block to shoot all the way back down to close the opening range gap, I'm guessing, right? Or at least go to the midpoint, which would be my target right there. That's the midpoint. Oh, and that's it. And I'm guessing it only went down here because this would only go down there if 11:30 is there. When is 11:30? Look at that. 11:30, 11:31 we take the liquidity. Just like this is too controlled. Look, so this is sell side liquidity at 11:30. This only becomes AM sell side at 11:30 because at 11:30 lunch macro starts, and lunch macro starts by going and targeting the people that have made money from 9:30. As you can see, we take that liquidity just 1 minute after the macro. Anyway, I'm pretty sure that's enough. We go to the ORG, and that's it for the day. You either take the longs like I did if you didn't have time, or if I'm patient or I had time, I'll take the shorts on the XFAs. Same concept again. It's either you buying the market maker sell model or you selling the market maker sell model, right? And I'm guessing this comeback down is going back to basically TGIF for Friday, which is 20-30% of the weekly range, and then closing it. Essentially, at 11:31, the market went dead, and as you can see, it went into consolidation, which tells me that on Monday we're gonna do two things. First of all, is clean up all the liquidity that we've been stacking up, right? So we've got Monday and Tuesday this week to clean up this liquidity that has been stacking up some sort of way, and on top of that, offer the second stage redistribution on the weekly. I'm guessing like something on the 8-hour would be an easy way to see it, right? So us taking some liquidity, let me remove this, going somewhere down somewhere, depending on the next week price action, of course. We don't really need to go down there, but if we really want to push for these highs for like next week or the week after, we might have basically the unicorn, the second stage redistribution, going all the way down, and then this will be starting like next week or the week after as a pure distribution week, where Tuesday's price action will be green, Wednesday's price action will be green, Thursday's price action. It might be a classic expansion week where we have a small consolidation Monday. Tuesday starts with a little manipulation and then starts distributing with Wednesday and Thursday, and then Friday closing its own range with a slight 20-30% discount, which could take us to these highs or even to the high, right? This was our original consolidation right here for its own market maker buy model, right? Anyway, I feel like that's enough for this recap. The only few things that I want to mention is the daily time frame and what we had. Why was that very easy target to get? Is because look at these relative equal highs, right? We either gonna take them or we're gonna make relative equal highs. So like, it was obvious that it was gonna go to this. However, now that we made these relative equal highs, that means we could just start going down again to then start filling this untouched SIBI in terms of this price range and also this whole consolidation area. Anyway, that's the market recaps for Thursday and Friday's price action.